Thing IPOs, apps are taken off the App Store. Chinese government says, we're launching all these investigations into you. They didn't alert investors. They didn't say anything to investors. It just went public on June 30th. Now you got multiple class action lawsuits here. Chinese government, the communist Chinese government, might I add, is doing a really great job to level the playing field against their big tech monopolies because, as you all know, no one else besides the Chinese Communist Party can have true power in a totalitarian government. And that is why you are seeing what is going on with Didi. Didi is basically Uber of China. Uber actually owns a pretty good stake of Didi because Uber had Uber China, and then that merged with Didi. They got an ownership stake in Didi. They got a board stake in Didi. Basically, what happened is Didi recently IPO'd right before the July 4th weekend. Here's their stock price, down over 20%. From where it opened, and then right after opening, it's actually over $16. So it would be down even more from its high. That was on Thursday, July 1st. So what happened here? Basically, right when Didi IPO'd, the Chinese government literally banned the app off of the App Store in China. Thing IPOs, apps are taken off the App Store. Chinese government says we're launching all these investigations into you. We gotta look into this, yada, yada, yada. There are already now lawsuits, U.S. shareholder lawsuits against Didi and its directors and the underwriters. It just went public on June 30th. Now you got multiple class action lawsuits here. It lost over $15 billion of market value. It raised over $4 billion in its IPO. The Chinese cybersecurity regulator announced on July 2nd that it had begun an investigation of Didi, and 2 days later ordered that the company's app be removed from smartphone app stores. So on July 4th, apps are off the App Store. The thing is public for 5 days. 2 days after going IPO, you've got the Chinese regulators say we are starting an investigation against your company. The way that these Chinese companies IPO, because they're not technically allowed to have U.S. and foreign investors, so they set up these shell companies. So the corporate structure employed by Didi and other large Chinese companies that list in the U.S. could present a challenge to plaintiffs. U.S. shareholders can only own stakes in Chinese tech companies indirectly through offshore companies known as variable interest entities, which the Chinese government has suggested it will begin regulating more closely. So when you buy a share of Didi, you don't actually even own a share of Didi. You own a shell company which has a stake in the actual Chinese entity that's called Didi. As that's a little disconcerting. Now, this is not anything new. We have been Wisdom Tree and all their wisdom, which Platt and the Wisdom Tree Growth Leaders Index, which we helped launch with Wisdom Tree. Wisdom Tree limited Chinese exposure in that index over a year ago. So there are a minuscule portion, although there's a lot of Chinese tech platform companies that would certainly meet the criteria and are platform businesses, certainly, and should be in the platform index. They're actually not in the index or in the ETF because Wisdom Tree got out in front of this thing and limited its exposure to these Chinese companies over a year ago. Very smart move, seeing a lot of this stuff coming. This isn't the first time, right? We had President Trump sign legislation which would require more transparency and auditing standards to be complied with by Chinese companies over the next few years. That, we've talked about this on the show where, for some reason, all the companies that list on U.S. stock exchanges have to follow Sarbanes-Oxley and all these really aggressive regulatory and audit requirements, except for Chinese companies. And we've already seen Luckin Coffee. This Financial Times article mentioned Luckin Coffee was like the Starbucks of China. This was no like shabby coffee company, which literally defrauded all their books. There's a bunch of fraud from these Chinese companies. We don't have transparency. We don't even have proper legal protection because you actually just own a shell company. You don't actually own it. Even if you own some of the company, it's still in China. What are you going to do? These Chinese companies are tapping US markets, getting US dollars, getting US pension dollars, and they're just defrauding Americans. But this is nothing new. What is interesting, though, with this case, with this Didi case, is that they really ticked off the Chinese government. And that's why I think this is only the beginning for Didi's pain. We've also seen the Chinese government become way more aggressive in the past few months towards tech monopolies. We've covered this ad infinitum with the ByteDance CEO stepping down, the Pinduoduo CEO stepping down, with Tencent and other tech monopolies in China that have come under immense scrutiny because they've gotten so much power. But Didi basically brushed the regulators aside. And that to me is where is actually where, if this was a legitimate legal case in the sense that, we had standing and this company could actually be held accountable because it was in the US and not China, whole other story. Here's the real issue is that now what's coming out is that these Chinese regulators had suggested to Didi that it delay its US IPO weeks before the IPO actually took place. Weeks before Didi Global went public, China's cybersecurity watchdog suggested that the Chinese ride-hailing giant delay its IPO and urged it to conduct a thorough self-examination of its network security. But for Didi, waiting for that would be problematic. In absence of an outright order to halt, it still went ahead. Chinese government says, hey, maybe you should delay this, right? And then they don't heed their advice and they just go ahead anyway and do the IPO. Yeah, Chinese government, not so happy. You line up what Jack Ma said back in October of 2020, where he was saying, financial regulators kind of stifle innovation and slow us down. Pretty much what he said, right? They literally canceled the anti-IPO. This guy disappeared, like one of the richest people in Asia, disappeared for a month. He went into re-education probably. Now, he's singing the tune and all this. The guy didn't even say anything that bad. Didi got a notice from this Chinese regulator saying, hey, maybe you should conduct a review. And China, particularly on tech and data, but this is also the way they see it is an infrastructure play. This is like their taxis, right? This is how people get around in the country. They're seeing this as very sensitive information, which is probably correct. We in the US have stumbled. We've let TikTok, we've gotten rid of the controls on TikTok. What we're doing here is just such a travesty. China is just walking all over us. That's a rant for another time. They got the notice. They didn't do anything. They went ahead with the IPO anyway. They didn't alert investors. They didn't say anything to investors that, the Chinese agency had told them to do a review and maybe they should delay the IPO. Nope. Nothing around that. And that really is, I think, where they do legitimately have a liability because they were not transparent with their investors. And as a result, now you see what happens. The investors have lost a lot of money. Didi got its check. And who foots the bill? The investors, predominantly probably US investors. So yeah, I think this is just, the beginning of many bad things to come to Didi and other Chinese tech companies. This is not the first case, as I've noted. China critics in Washington believe the legislation should serve as the starting point for a broader decoupling of capital markets between the countries. This is referring to the legislation that Trump signed into law, I think maybe last year, putting tighter standards on Chinese companies listed in the US. Decoupling. It's the only solution. It is time. This is the great decoupling. And we are just at the beginning period of it. It is time to decouple, not just with China, but with communists, right? We thought that we could work with communists. We thought that we could change their ways and we could bring capitalism into the country and that they would change. But they haven't changed. They have taken advantage at every step of the way for not years, but now decades, and they're not going to change. So it's time to decouple. This is just one example of a myriad of examples. A communist dictatorship, totalitarian government doing what it pleases at the expense of everyone else. And, that's the communist way. So what are you going to do? You just can't do business with them. You can't depend on them. You got to decouple. Jim Cramer, quote, "You're a moron if you buy a Chinese deal after this. You're a moron. I don't care if it pops. Why do you need to put your capital at risk after this?" The great decoupling has started. All these companies, unfortunately, that have invested money into China, they can't get their money out of China, right? So, yeah, you put $100 million into China. Hey, you made $500 million in China. So can you take like $200 million back? No. So did you make $400 million? Or did you just lose $100 million? Yeah, I actually think it's the latter. It's going to impact stocks, right? I mean, it's going to impact these companies. You can't rely on the numbers. You can't rely on it. It's just none of it's verified. And I guarantee a bunch of it's garbage. I would get out in front of this if you can. Hi, I'm Alex. Thanks for watching the show. Make sure to hit that subscribe button, but even better, make sure to follow us on Odyssey, follow us on Rumble, and text us 203-646-5159. Text the word Monopoly. You'll be subscribed. You'll get updates about when we're going live, our latest videos, and we'll send you even a little goodie bag. And in the event that we all get banned from big tech, we'll still be connected.